Bring in our guest, Brian Charles. He's an analyst at RW Pressprich. He's one of the most accurate when it comes to Bank of America. That makes him a Bloomberg best. Brian, good of you to be back with us. Let's talk about Bank of America and what we can say right now. There is a lot of material to digest. You've been flipping through the press release just as we have. 33 cents a share. Does that say anything important about this bank right now?
It's positive that they came in the top end of their guided range from a couple of weeks ago. As far as the overall performance of the quarter away from mortgages is concerned, that's still coming out in the numbers, but a couple of quick numbers I looked at least the net interest margin did not decline as much as I thought it would. I think they guided to about 2.5% going forward, and I think I saw it was about 2.58%. Also, their losses do continue to come down away from mortgages or across all of their other loan products. That was, I think, about 2.44% for the quarter. I'd expected it to be about 2.49, down from 2.6 before. So at least they're making the progress on the improvement in their asset quality across their other loans away from mortgages, just like JP Morgan and Citigroup have been.
So, Brian, to your point, you're essentially saying Bank of America will be able to absorb its losses, and it sounds like you're saying they're going to do better than their peers, right? And that's basically what investors need to know.
Yeah, I think the stock will do better than its peers, and one of the reasons I have it on a speculative buy is because where it's trading now, literally below $10, I've got a potential value for the stock once they put these mortgages behind them in the $20 range, and once they grow into their capital that's going to be required by Basel III and they can reinstate their dividend, that could be a $23 or $24 stock. So that's 150% potential upside that I just don't see with other banks right now. Now, they're not out of the woods right now, in that they've got the mortgages that the mortgage losses that they've guided to, the mortgage loss settlements that they've reached with GSEs, with monoline bond insurers, and with private label investors. But that is a portion of all of their overall exposure. So I don't think they're done. They're certainly by no means done with the mortgage losses that they will post, I think, over the next year or so. But I think that they've got the earnings power to absorb those losses over the next couple of years, and then earnings power to grow into the Basel III requirements after that.
Brian, why is it that investors, and the stock price tells the story, just don't seem to believe that yet?
It's a new challenge for the company in dealing with the magnitude of these mortgage losses. And Brian Moynihan is integrating one of the most difficult acquisitions in Countrywide, I'd say, in the last 50 years. So trying to get his arms around exactly what the mortgage exposure has been or what ultimately is, I think it is a real challenge. And while I think you're pretty well supported in arguing that they could try to challenge these mortgage putbacks, trying to get it behind him, I think, is probably the best move right now. But we're still not sure exactly what that range will be. I've extrapolated what the overall exposure could be given the charges they've already taken, and I've come up with a range that's probably about $38 billion all told. But until we get some more clarity around that, I think the market is being a little more cautious.
So we're watching B of A stock in the pre-market. It's actually heading higher. The company exceeded its own internal earnings forecast. We talked about CEO Brian Moynihan. He has a big job. How much more time does he have left to get over this mortgage mess?
Well, as long as he continues to make progress in putting the mortgage problems behind the company, I think he's got time. And he's made a lot of progress this year, settling with the one settlement with the GSEs, so there's still some GSE exposure. One settlement with a monoline insurer, those are still monoline exposure, and a big settlement with the private label investors. But there's still more exposure to come there. And that settlement still has to be approved. I don't think that will be approved, or at least the hearing for that won't be until November. As long as he's making progress, though, I think the market will at least react positively.
When you compare Bank of America, Brian, with its peers, it trades at a massive discount to book value, and others, like JP Morgan, for example, don't. So they just said book value per share, $12.65. The stock is trading under $10. What's it going to take to close that gap?
I think it's just more clarity on the mortgage exposure right now.
That's what it comes down to, simply.
Yeah, the company still faces the other challenges that the other banks are facing in terms of loan growth and net interest margin in a challenging economy.
But how about credit quality? Let's again compare BAC with JPM, because JPM reported last week.
Right.
We just calculated this during the break. $2.4 billion pre-tax in reserve releases. They said that they earned, excluding the mortgage charges and such, $3.7 billion. Now, they're not quite apples to apples, but 2.4 is a big chunk of 3.7, a much bigger chunk than we saw in the case of JP Morgan. Are people going to have the same credit quality issues with Bank of America that they've been having with other banks for several quarters in light of these big reserve releases?
I'm not too concerned about the reserve releases because they reflect the improvement in asset quality.
Not earnings quality. Not credit quality, but earnings quality.
Well, in terms of earnings quality, I'm not too concerned about the impact of reserve releases on overall earnings because they essentially mirror the improvement in overall asset quality, or basically credit quality of the underlying portfolio. So as long as reserves are still covering losses, a certain percentage, especially in an improving asset quality environment, I'm not concerned about releasing reserves. And that's pretty much what all the banks are doing.
Brian, thanks so much for being with us this morning. Brian Charles joining us from RW Pressprich right here in the newsroom with Erik and myself, breaking down Bank of America's numbers.